Alec Walker with Crestmont Private Wealth. Today's financial concept is restricted stock. I'll go over the taxation and timing at grant date, vest date, and ultimately at the sale of the security. Let's get into it. A restricted stock plan is one in which an employer can grant company stock to an employee, generally at no cost to the employee, subject to certain restrictions on when that stock can be sold. The time between the grant date and the time the stock can be sold is generally called the vesting period. For example, an employer could grant 300 shares to an employee, but those shares will vest over a 3-year period. This means that each year, 100 shares will become available for the employee to sell if they desire. This creates an incentive and loyalty alignment between the employer and employee, as both parties want to see the price of the stock increase, and also the employee must remain employed to receive the full value of the restricted stock plan. There are tax considerations to be aware of at each stage of the restricted stock process. When the shares are granted on that grant date, there are no tax consequences to the employee. That's because the employee does not have the option to sell those shares for economic benefit. However, the next years, when that first 100 shares vest to the employee, the fair market value of those shares on that vest date will be considered taxable income to the employee. For example, if it's $10 per share, $1,000 will be considered taxable income, and the employer will generally withhold a certain number of shares to account for the tax withholding. Now, the good news is the holding period will be the date of vesting for that stock, and the cost basis will be equal to the fair market value, so that $1,000 on the date of vesting as well. These are both important when you consider the subsequent sale or disposition of those securities. The timing of that will determine whether it's a short or long-term capital gain. If you sell the shares within a year of the vesting date, you'll be subject to a short-term gain or loss, depending on the value when sold. If you wait a year to sell the securities, you'll be subject to a long-term gain or loss, depending on the value of the stock when sold. The strategies and considerations on when to sell restricted stock will be discussed in a second video. If you have any questions, please reach out to us via info@crestmontpw.com or visit our website at crestmontpw.com. Thank you.